In this video, I'm gonna show you how serious traders find important levels to trade. Before you think about anything else, no, it's definitely not support and resistance lines. We are talking about serious professional trading here. The tools that I'm gonna introduce can easily help us to find the best areas to trade from. I'll try to make it as quick, simple, and informative as I can. The tool is called Market Profile. It basically shows the time that traders spend at each price level. Now I'm gonna show you E-mini S&P 500, but first let's see what the retail traders are doing when they are opening their trading platforms and how they navigate to find interest areas to trade from them. As said before, this is E-mini S&P 500, and let's see how the retail traders putting support and resistance lines. First, they are minimizing their chart so that they can have an overview of how the price is moving on E-mini S&P 500. And basically, they are putting support and resistance horizontal lines in the places that there are many candles. So these lines must be tangent to a lot of candles. Now with this logic, let's go and put some support and resistance lines to see if this actually works and see how our charts are after we put support and resistance lines. We are looking at a bigger picture, and so we have to minimize a lot. I think we did a pretty good job in putting support and resistance lines here for approximately 7 to 10 days, and I think that those support and resistance lines are somewhat the areas that retail traders are gonna put in the future to indicate where to trade and where the market reacts in those areas. This is an overview of how it looks when we put support and resistance lines. I'm sure you are all familiar with this, but now let's get serious and see what the professional traders are doing. I'm sure you never saw this tool before, because this tool is the most important tool that the professional traders are using. So let's see how you can use this tool properly. Now, apologies because you can't see here days and here the price ladder, but this is because I'm trying to minimize it to see better the market profile. Now the market profile is a tool that can help you to see how much time traders are spending in each price level. My aim here is to try and make it as quick as possible and informative to learn a lot about this tool, because this tool is very important. Now, this is the market profile, and here if we zoom in, you can start seeing some letters that are formed over here. Let's zoom more and let's move the chart a little bit down, and let's zoom a bit more again. Now you can clearly see for this market profile, and this is basically the last day, which was Friday, and you can see all those letters here. These letters represent a 30-minute periods until the close. But just for the record, this market profile only shows the regular trading hours, which is the opening of E-mini S&P 500. Now, it's best to use this market profile only on RTH, because if you use it on electronic trading hours, it could be double the size of this day. This represents one day, and it will not be informative, because with ETH, you can see as well the times that the algorithms and automated trading occur, and this is not important because we are trying to trade only when humans are trading, and this is a more valuable information to only have the RTH, which is regular trading hours for market profile. These letters are actually 30-minute periods, so from the start of the regular trading hours in the morning, the first period, which is the A period, starts. Here, the blue letter A is where it starts, and we can separate the periods into letters to see more clearly. So this is the A period, and you can see it might go up, it might go down, and you can see that it ends here or here. We don't really care where it ends. And then it starts the second period, which is B period, C period, D period, and so on and so forth until the end. And this arrow here represents where the day closed. So it starts here and it ends here. Now we are putting everything back together and see that here a lot of overlapping 30-minute periods occur here. Here is the price level that most traders are spending time for that day. That's why it changed color and it became red. And these are the highs of the day, and these are the lows for the day. And you can clearly see that this is actually the area that traders are spending most time for the day. Here it's less, so it's not an important area around here. Another amazing thing you can do with the market profile is go and put volume on this market profile, which will be very interesting when you add volume and time together. Let's see. Now, as you can see clearly that this is the volume of the day. If you zoom out, you can see that this, as mentioned before, is the price level traders spend most time on. And you can see here that this is the volume. So in this area here is actually really accurate, because you can see that the volume here, that all these overlapping times occurred, you can see that this had the highest volume over here. So this is verified, and it's actually very helpful to see those two things together at the same day. Now we can actually go again and zoom to see the letters, and what we can actually change here, instead of letters, which for me works the best because you can see each 30-minute period separately until the close, you can also change it if you like to blocks. Let's try and change it together. So we go here and then we scroll down until we find this sub period. Now we can go and change this to blocks. Now we can see that these, the letters converted into blocks, and each period you can see that it changes colors as it goes on. I'm gonna go back and change these into letters. Now what else we can do, instead of putting support and resistance lines, we need to go and see how we can find with this market profile interesting areas to trade from. Now what I'm actually going to do here, I'm gonna merge those 2 days, because you can see that those 2 days are actually more or less on the same highs and lows of those 2 areas overlap, and so they create a specific value area that a trader can trade there. And this area is very important because you can see that it creates a normal distribution or Gaussian distribution. So we can go and merge this area like this. And so here you can see that it created a stronger normal distribution that the traders can trade from here. As mentioned on my DOM video, this is called Gaussian distribution, and here is 70% of the value. So you need to go and trade from lows to highs and from highs to lows in that area. This is called point of control. This point of control is the most traded area. So instead of a line, we put a rectangle over here to see that this actually looks like this and can help us in the future. So as you can see here, this is a strong normal distribution, and here for the next day it went imbalance. So this is an imbalance and this is a balanced day. So if you have any questions about balance and imbalance, you can go to my previous videos to see how to identify balances and imbalances of the market and how they work. In general, the concept behind this is that we are trying to merge days that overlap, and it should look like this after merging together everything. But note that as long as a new interest area is merged, then we can discard the previous drawing over here and we can cut it here, and we can only reference the new merge. So you don't have to be like this. You need to cut this drawing over here, because this, it means that is a revised interest area that the traders are gonna trade over here instead of the area over here. So you need to neglect this and only reference the new area over here that traders are more likely to trade again. And these again are recent areas, and it should look like this. As you can see over here, the price only does two things: balances and imbalances around those areas. So support and resistance lines don't give you anything. They are just lines that for me don't make sense. These are the things that you need to trade from. Areas, guys, it's really important to point out when the day looks like this, like a line, is actually not a good idea to merge with the previous day. For example, you can see here that this day overlaps with the next day, but this actually looks like a line and there is not much time spent, and this day is actually imbalanced. But let's see, if you merge those 2 days like this, you can see that the highs are here and the lows are here, but you cannot trade on them because not many traders traded over here. There's not much time spent in this area or volume in this area, and the most time and volume is around here. So you cannot merge those 2 days because you will not get an actual reading out of this. The days that you are gonna merge should look like a normal distribution like this, because 70% of the values will be in this area here, and you can get an actual information. The same here. I didn't merge those days because this has the most volume around here and this day has a little volume here, and actually looks like a line. So you don't need to merge those 2 days because you will not get an actual value area to trade from. So you need to be careful and not see the highs and lows of the days and just merge them. You have to go back and merge all the days that overlap for the past year and a half. Guys, there is work. It might seem boring, but you need to do it if you actually want to make it as a trader. You need to realize that nothing comes easy. You just had an insightful glimpse of how professional traders work. So if you still believe in support and resistance lines, I don't really know what to say anymore. At the end, it's your choice. Toss the support and resistance lines in the trash and learn to trade like this. Way more informative than some lines. Subscribe, like, comment if you have any questions, and I'll see you soon.